All right, Matt the Mortgage Guy here, recording a quick video to answer the question, what do I do when my appraisal comes in light? Or what happens when my appraisal comes in light? By light, I mean shorter than what you've agreed to pay for it per your purchase contract. So there are 1,000 different variables. I'm going to talk about some of them. I'm going to talk about in today's market, in 2021, at least in my market and tons of markets of other professionals I talk to, what the norm is, what's happening, and how you can protect yourself and put yourself in a good position when it comes to the appraised value of the home you're buying. So first off, I want to say it is very common in 2021, more common than it's ever been, to either do one of two things. One, waive your appraisal contingency altogether, meaning no matter what the house appraises for, I'm agreed to buying it for X price. Or two, at the very least, you say, I'm offering $450,000. I agree to pay $450,000 as long as the appraisal comes within $20,000 of that. So if it appraises for $430,000, I'm agreeing to pay $450,000. If it appraises at $440,000, I agree to pay $450,000. If it comes in more than $20,000 light, then you've got the ability to renegotiate. So I'll tell you that last year and the year before, this was a lot less common. And so with an appraisal contingency in place, you could just write whatever offer you wanted. And if the appraisal came in lighter, then you opened up renegotiations with the seller. In 2021, with so much demand and so very little supply, every single buyer, and I shouldn't say every single, the vast majority of buyers that are getting their offers accepted are waiving the appraisal contingency. Whether you like it, whether you believe that it's the right thing to do or not, it's just what's happening. So you've got that, and then you've got making up the gap, like I talked about, where you offer $450,000, you're willing to make up $20,000 in gap. What I want to talk about in this video for buyers considering this, and we're talking to agents about writing offers this way, what does that mean for you as the buyer? Because it means different things to different people, and it means different things based on different down payments. Even when I've had deals lately that I felt like we talked about quite a bit up front, when it comes to getting that appraisal back, I feel like there's still confusion. So I want to go over one scenario first that happened earlier this year, where let's say you're writing an offer at $450,000 and you're putting $150,000 down. In this scenario, there was an appraisal contingency and there was nothing written in there about making up any difference in price. It was just $450,000 purchase, we're putting $150,000 down. And so they're doing a $300,000 loan, right? The appraisal came in at $430,000 and the buyer and the realtor alike were trying to get me to explain what the difference was going to be for the buyer. And here's the short answer for you. Because they were putting down 33+% and the appraised value versus the loan amount still had the lender looking at it as a 70% loan to value, there was absolutely nothing changing loan-wise. Terms were exactly the same. Loan amount was exactly the same. The only difference between if this thing appraised at $430,000 and $450,000 was the number on that sheet of paper. And in the buyer's head, what they felt about paying $450,000 for something that an appraiser, one person on one day, deemed it to be worth $430,000. No difference at all with the loan terms. Now that's going to be different if you're putting 5% down. And I'll give you an example here. Let's say you're buying it at $450,000 and you're putting 5% down. 5% of $450,000 is $22,500, plus you've got closing costs. You've got title fees, you've got setting up escrow and all that. Now it comes in at $430,000. You can't just still put down this $22,000 because then you're almost doing 100% loan to value. That loan product just doesn't exist. It might have 15 years ago, it doesn't today. At least without not using some assistance program from a government entity that's a terrible idea, horrible loan. Don't get me started. Okay, so the same scenario, except for you're putting 5% down and the appraisal comes in at 430. Now what does it look like? Now you've got to put 5% of this 430 down plus the $20,000 difference between 430 and 450. So what you're having to bring to the table is being increased by about $20,000, and then plus the closing cost. So if you're putting down 3%, 5%, 10%, and appraisal comes in short, it's gonna make more of a difference than if you're putting 35, 40, 50% down, appraisal comes in light, it really doesn't affect your loan. You know, there's 60% loan to value, 75% loan to value, 80% loan to value, where there's different pricing based on what the down payment is. And as long as you're in that same band of down payment, this specific scenario, nothing at all changed, nothing. Except for that you were paying $450,000 like you agreed to when you wrote the offer, and the appraisal happened to come in at 430. So hopefully that clarifies that. Now what I wanted to talk about is, you know, what it means to you as a buyer to waive your appraisal contingency. So you'll probably get this advice from a realtor. If the realtor is shooting straight with you and saying, hey, listen, I talked to the listing agent, they've got 44 showings over the last 3 days. It's gonna take us offering $470,000, removing the appraisal contingency altogether. What does that mean for you? That means that you're offering $470,000, and whether it appraises at 410, 430, 450, you've agreed to pay 470. Most agents are gonna be able to tell you, based on all the comps I see, it should appraise for at least 440. Maybe it appraises up to 460, maybe 470. But they'll have a range, right? So it's never gonna appraise at 400 unless the appraiser's smoking the wacky tobacco. But you're gonna have to be in a position where you either bring that extra if you're putting a smaller down payment down. And here's something to think about, worth noting. Let's say you're buying it for 470 and the plan is to put 15% down. And based on that, you've got a payment you're comfortable with, everything's good. It comes in at 450, which instead of putting, let's do the calculations. 470 times 85%. This is a 399, 500 loan on this one. Now the appraisal comes in at 450. Maybe at 450, you put 10% down, 405. So you're still paying 470. It appraised at 450. You're gonna get the terms based on 10%, and it's really not gonna affect your down payment, but it's gonna maybe affect the mortgage insurance is a little bit more. Hopefully that made sense. It's unfortunately just something that can't be avoided. You're most likely, in most markets that are highly competitive, going to write that offer where we're offering 470 and we're willing to pay 470 as long as the appraisal comes within 25,000 of that, or waiving it altogether. I can tell you that the nice properties in nice neighborhoods that are getting all the attention right now, the appraisals almost always waived. And unfortunately, I think that it really hurts more than anybody these folks. Some of these folks, 22,500 plus closing costs, that might be a vast majority of what they have in total. They don't have an extra 20,000, 30,000 to bridge the gap should the appraisal come in light. So you can't even write that offer that says, I'll bridge this gap if you don't have the money to do it. So hopefully that cleared things up. I know it's a really popular topic because my market, Southern California, Arizona, Las Vegas, I talk to people all over the country in all kinds of different markets, and it's the same everywhere. 50 plus showings, 15 plus offers, well above ask, waive the appraisal contingency, waive the loan contingency at times. If there's any contingency that's remaining intact, most people want inspections. They want to make sure that the sewer is not in disrepair and going to cost you $30,000 to fix, or there's some foundation issue it's going to cost you $80,000. So any questions at all, happy to answer. Matt, M-A-T-T, at mattthemortgageguy.com. If you're in California, I can lend to you. If you're outside of California, I'm happy to refer you to a great broker in another state that can help you out. Thanks for watching.